Good evening and welcome to the Friday edition of Business Life. Coming up, favorable growth outlook pushes Bank of Ghana to keep policy rate at 29%.
Including remaining vigilant to ensure that the end-year inflation objectives are achieved. Given these considerations, the committee decided to maintain the policy rate at 29%.
We will get to hear the thoughts of economist Dr. Edu Owusu-Sarkodie, who believes the move is in the right direction.
I think the best decision that the MPC took was to maintain it because of the uncertainties surrounding the politics, economic uncertainties, and also, of course, exchange rate also feeds so much into inflation.
We are live with the business community on that. Plus, Ghana gets more than $9 billion as total exports earnings for first half of the year, representing a marginal increase over what was recorded in June 2023. We have details of these and more lined up for you. Please stay. Always a pleasure to come your way with the very latest in the world of business. I am Pius Kojo Baka. We can now take a look at our stories. Favorable growth outlook and strong reserves position pushed the Monetary Policy Committee of the Bank of Ghana to hold its rate at 29%. George Yafe was at the NPC meetings and has the rest of the story.
Bank of Ghana Governor Dr. Ernest Addison argued that their decision to keep the policy rate was also influenced by current developments in the economy.
Even though inflation is expected to remain within the target year band, the risks are tilted slightly on the upside. This will require maintaining the strong monetary policy stance, supported by strong fiscal consolidation efforts, including remaining vigilant to ensure that the end-year inflation objectives are achieved.
This is what the governor had to say about the city and what can be done to firmly stabilize it against the US dollar.
What else can you do about expectations? What else can you do about uncertainty about, the economy, given the fact that we have an election coming up? You tell me. So it's not everything that can easily be, handled. Some of them are very complicated.
The governor of the Bank of Ghana, Dr. Ernest Addison, also revealed that they've been able to build the required dollar reserves to meet servicing of Eurobond debts from this year.
We were very much aware of payments that are upcoming. If you look at the cash flow projections, a provision has been made for this particular payment. So yes, we have built up reserves to meet some of these lumpy payments in the outlook.
When the governor of the Bank of Ghana was asked about reports of a new building to serve as an official residence, this is what he had to say.
But that residence is not being built for the governor. It's just an official duty post. The governor already has a residence. And mind you, it's even larger and posher than what they are talking about. So I have no incentive to build anything new. Because where I live now is posher and nicer than what is being done.
So what is the advice to government going into this election year when it comes to spending and the economy? This is what the governor had to say in his response to that question.
The only advice is to stick to the program targets that we have all agreed on under the IMF program.
Bank of Ghana Governor Dr. Ernest Addison argued that current data show that the economy is on track and is showing signs of strong recovery. However, everything must be done on the fiscal and the monetary side to stabilize the situation going forward.
We've got more reactions on the back of that, and economist Dr. Edu Owusu-Sarkodie has maintained that the decision to hold the policy rate was in the right direction.
The fight against inflation should not be limited to the central bank alone. There are other sectors in the real sector, like agri sector, the trade and industry, who must also come to play their role. But the governor has maintained that there are some uncertainties. The disinflation process has slowed. There are also some uncertainties in the geopolitical tensions in the Middle East, that of Russia and Ukraine. He also mentioned that 2024 seems to be an election year for so many, countries around the world, and of course, particularly in Ghana. So he wasn't too sure of whether to increase it or not. I think the best decision that the MPC took was to maintain it because of the uncertainties surrounding the politics, economic uncertainties, and also, of course, exchange rates also feed so much into inflation. So to the extent that we have not contained the exchange rate, to the level that he wants, he's a bit, careful not to reduce the policy rate to trigger inflation. So to the extent that the inflation has slowed, he just wants to be careful to maintain. Of course, he admits that it's high. I mean, everybody knows that the policy rate is high, but you don't want to, reduce it. The last time they attempted to reduce it, remember it was around 30, then reduced it to 29%. We saw that afterwards inflation picked up. And so he doesn't want that situation to happen again. So even though he admits that it's high, we all admit that it's high, but we are dealing with a monster called inflation, and until we defeat inflation, they are a bit careful on how to, manage it, and be careful on whether or not they want to reduce the policy rates.
Quick one on the bit about the local currency and the concerns or the response to about the fact that sentiment and election is playing a major role, even though on the monetary side they have done what they have to do. Some are saying that maybe the Bank of Ghana still has to do more.
Yeah, of course. If you haven't achieved your aim of killing the sentiments, there's a lot that they can do, and I'm sure the governor has issued instructions to their various heads in this and in the central bank. We know of how they deal with the forex bureaus, and also we have the black market operating parallel to the formal market. So it's important to strengthen their measures so that they can deal with all the sentiments.
All right, so I want to bring in the business community. Let's go on Zoom and speak to the Chief Executive of the Ghana Association of Industries, Seth Chumakwaba. Thanks so much, Mr. Kwaba, for speaking to us or agreeing to speak to us on Business Live. Now, once again, the governor had cited risks to inflation, of course, strong reserves position, among others, as reasons to keep the rate at 29%. You think that is not enough or basically to maintain the rate? Do you think so?
Well, thank you very much, and good afternoon and evening to your viewers and listeners. Well, generally speaking, I think this is not an unusual trend. It is actually expected. I'm not surprised at the Bank of Ghana maintaining the policy rate. And if you follow the trend, when we have stability in the macroeconomic environment, normally you will see the rates dropping. But when we have flip-flop of the situation, and indeed in May we experienced drastic, depreciation of the cedi and all the challenges that came with it. So if you put it together, then one cannot expect something different. So clearly, you could see an effort on the part of Bank of Ghana governor to maintain and consolidate the stability. So one is not surprised that it's been maintained at 29%. However, for businesses and for long-term development of industry, we would have loved to see the policy rate coming down. But it cannot be artificially fixed. We cannot say that is what you wish, because anytime the policy rate drops, normally, even though you may not have immediate effect on the interest rate, eventually it drops down the interest rate. So ideally, we would love to have the policy rate dropping. But you cannot fix it artificially because it's based on a lot of macroeconomic indicators. And from the indicators, it appears maybe at this stage, that is what Bank of Ghana can do. So we cannot fault the governor for maintaining, or the Monetary Policy Committee for maintaining the policy rate at 29%, even though we would have wished that it comes down, because when it comes down, it has more positive effect on industry. It is also quite obvious that we are still thinking very short term. Everything we are doing is short-term measures to contain the situation and all that. But for businesses, we need to consider and start looking at the long-term measures, medium to long-term measures. How do we position ourselves to the extent that we have stability in the macroeconomic environment, people can plan, and we have all the indicators in a favorable manner. And that is what we have to work towards. But for the short term, it is really not a surprise that the policy rate has been maintained at 29%.
Well, at least it has been maintained better than increasing basically. Now, I want to know and give me a sense of that. How is that going to impact your ability to borrow from the banks?
Well, for me, if it's been maintained at 29%, what it really means is that interest rates will not come down because these are all major indicators of interest rates. And the interest rate is a major determinant of the ability to borrow. And already, because the policy rate is high at 29%, interest or lending rate is very high. We are talking of 30% plus. So if it's been maintained at 29%, then obviously you are not expecting that interest rate is going to come down. And if it's not going to come down, it will affect borrowing because even when the bank has the resources or has the liquidity to give, if they analyze your business and they realize that your ability to borrow at that rate and generate the returns and payback is weak, they will still not lend to you. And you, the business person, if the interest rate is very high, you would also not dare going to borrow at that high interest cost. So really, as long as we haven't come down on the policy rate and we continue to keep it at this high level, then it's going to affect borrowing rate. There's no doubt about it. Even though there's that appetite for borrowing, the interest cost is a major factor that is prohibiting growth in lending.
All the same, the Bank of Ghana data also showed that credit to the private sector has picked up strongly. And is that the situation on the ground really?
Well, I mean, in terms of nominal figures, it may. I will not doubt that. But what kind of borrowing has picked up? If it's the short-term borrowing, then it is going to the usual trading and service sector. But for industries, borrowing at 30-something%, 32, 35%, to do long-term business, the kind of business industries want to do, which is investing long-term, you need a much lower interest cost to be able to do that kind of business. So it may have picked up, but we have to actually analyze the data and see the sectors that the interest and the lending is picking up. If it's picking up in the industrial sector, that would have been very good. If it's picking up in the agricultural sector, it means the productive sector is growing. But I don't think that is the situation, and that's where we need to really analyze. So it may have picked up, but is it being picked up by the productive sector? For me, that is very important.
All right.
But at least some stability has been achieved, some consolidation of the stability is important. But we need to go beyond consolidation to growth.
So, Mr. Kwabwa, the challenge here, is it still the cost of credit or the business environment?
I think the cost of credit is also determined by the business environment. If the business environment is bad and is weak, it affects the cost of credit. And the other way around, if cost of credit is also part of the business environment. So if the cost of credit is high, people will not be able to borrow and do business and expand the scope of business and do more investment in different areas and employ more people. So a combination of the two is always important. You need to have a good business environment which will influence the cost of credit and then influence positive development in the business scene. So both of them must work simultaneously because they are intertwined somehow.
Thanks so much, Seth Chumakwabwa, for agreeing to speak to us on Business Live. He's the Chief Executive Officer of the Association of Ghana Industries, AGI, speaking to us there. Now, Ghana's total exports earnings for the first 6 months of this year increased marginally to hit $9.2 billion. This was contained in the Bank of Ghana's summary of economic and financial data ending June this year. There is more in this report.
The report showed that in June 2023, Ghana earned $8.1 billion from its exports, compared to $9.2 billion ending June 2024, with the exception of cocoa, which the country had just $760 million, which was far lower than what the country recorded in the same period for last year. All the other commodities in June 2024 brought in more than what we had in June 2023. The amount of money the country spent on import for first half of this year increased marginally to reach $7.4 billion up from $6.5 billion in June 2023. The development resulted in a trade balance of $1.8 billion. For some, this could be good for the country's reserve and possible impact on the local currency.
Business Life, we are back with more. Please stay. Welcome back to Business Life. The Ghana Enterprises Agency is keen on building the skills of entrepreneurs through partnerships with hubs and networking centers across the country. This will help grow the operations. Chief Executive for the Ghana Enterprises Agency, Kosi Yankee Aye, made this known to Joy Business at the closed session of the Market Creating Innovation Boot Camp in Accra, together with some entrepreneurial hubs here in Accra. Here's a report.
The 3-day boot camp provided opportunity for selected entrepreneurs to benefit from the use of modern tools in enhancing their work as well as increasing productivity. This is aimed at getting local businesses with international platforms for skills exchange and business opportunity that meet global requirements. Speaking to Joy Business at the closing ceremony, Chief Executive for the Ghana Enterprises Agency, Kosi Yankee Aye, announced that such partnerships will continue to ensure more entrepreneurs benefit from modern skill sets.
We envision a lot of successes. One, most importantly, is the strengthening of our hubs network, of which the Executive Director is here to work with us to ensure that we do more. I think what we envision as success is that we're going to get more innovative-driven entrepreneurship, where entrepreneurs are coming up with solutions to the challenges, where they're looking at how to scale and build their businesses and how to grow it. And we see a partnership amongst all the members for posterity, where we are able to do more for the country, where we are able to build more and also grow more businesses.
Director of Fellowships and Global Initiatives at the Center for Development and Entrepreneurship highlighted the importance of such forums for small businesses, since Ghana has a more energetic population.
Well, first of all, Ghana is a hub for innovation and entrepreneurship in Africa, really. The country really boasts from having a young and very energetic and very dynamic population with a very strong entrepreneurial spirit. Also, what is also helpful here is that Ghana's government is very much supportive of the growth of startups, and particularly with our partners at the Ghana Enterprises Agency, Ghana Hubs Network, and She Hubs. This creates a supportive ecosystem, and coupled with Ghana's strategic location in West Africa, really positions it as an ideal location to launch a series of boot camps that will look towards empowering promising ventures and empowering entrepreneurs.
Some of the beneficiary entrepreneurs also shared their experiences from the training program.
So mostly we just focus on our potential customers, the people that buy from us, but I learned how to attract other people that are not purchasing from us. So something like my non-consumers are, as a haircare brand, my non-consumers are people who are not aware of my products and my services. So I would increase my advertisement so I can reach out to people who don't know about me.
When we had a chance to interact with other people who have also had a journey like ours, and really it was amazing to hear them talk about their journey, their challenges, and what they went through.
In more business news, the Minister of Environment, Science, Technology and Innovation, Ophelia Mensah-Hayford, has retweeted government's commitment to implementing policies to build resilience against climate change. According to her, government will continue to champion eco-friendly practices and advocate for fair access to resources to ensure climate action. She was speaking at the E2A conference.
The E2A 2024 conference explored the linkages and synergies between resilience and climate change adaptation, addressing critical impacts of climate change in Africa. Minister of Environment, Science and Technology, Ophelia Mensah-Hayford, said more policies have been implemented by government to build resilience against climate change.
Implementing early warning systems that provide timely and relevant information about anticipated shocks such as storms, surges, rainfall intensity, drought enables communities, authorities, and people to take appropriate action to mitigate their efforts. Putting in place systems to protect natural capital, example, mangroves, forests, reefs, and soils, and physical capital such as houses, shelters, roads, and water systems from the impact of climate change. Establishing social protection schemes for affected communities has become more than urgent, considering the cases of over 26,000 people who were affected in October 2023 flooding in the southeastern part of Ghana.
The event brought together experts from over 40 countries to discuss innovative research and practical solutions for climate change challenges in Africa.
Before we go, the Third World Network Africa, in collaboration with the Southern Africa Resource Watch, has launched the Anti-Strategic Lawsuit Against Public Participation Toolkit to protect individuals or organizations bringing out their ills in the extractive industry and reduce human rights infringement. According to the coordinator of the Third World Network Africa, Dr. Yao Graham, the toolkit would equip defenders with the knowledge and tools needed to effectively challenge legal repression, especially in the extractive industry, and advance environmental justice.
The training on the anti-SLAP toolkit is aimed at empowering CSOs to build resistance to the SLAP suit in the extractive industry and protecting the environmental and social rights of community members. The toolkit includes practical strategies for identifying and responding to SLAP suits, case studies illustrating successful resistance tactics, and legal resources outlining relevant laws. At the workshop, coordinator of the Third World Network Africa, Dr. Yao Graham, said the toolkit is necessary because it protects CSOs against the SLAP lawsuit, which burdens them with the cost of a legal defense.
It's a meeting, as I said, about how people who speak out about the ill issue, the negative issues around mining, and also human rights and free expression can better protect themselves against threats, lawsuits, criminal proceedings, frivolous criminal proceedings meant to intimidate them to keep quiet. This is it's a booklet which provides information, explains what SLAP suits are. SLAP stands for Strategic Litigation Against Public Participation. Why strategic? Because powerful people, powerful institutions and individuals many times will bring an action, whether a claim of defamation against people, tie them down in court. So the effect, of course, is that it's strategic in not only silencing the person who has been sued, but also sends a signal to other people that if you open your mouth too often and try to threaten our interests, we'll find a way to pin you down.
The Third World Network Africa is hoping to foster collaboration between countries facing these challenges and build the capacity of civil society organizations.
And that's our part company here on Business Life with me, Pius Kojo Baka. For more stories, do log on to myjoyonline.com/business. Grateful serving you beyond the numbers is next.